Today in this video, we explain why governments love inflation and why you pay the price. You think rising prices are just part of life? Think again. What if I told you that inflation isn't just random, that it's a tool, a secret tool used by governments to shift wealth, and most people don't even notice it happening? Imagine going to the grocery store and seeing your favorite items cost more every month. Your paycheck barely keeps up, yet the politicians smile. They're not concerned, they're benefiting. Why? Because inflation quietly transfers value from workers to governments, from savers to debtors, and from the many to the few. Let's start simple. Inflation is the rate at which the goods and services rise. If a loaf of bread cost $1 last year and now costs $1.20, that's 20% inflation in a year. Seems small, right? But compound it over time and suddenly your hard-earned money is worth less month after month. Most people think inflation is accidental. It isn't. Governments often control inflation. They decide how fast money circulates. They decide how much debt is printed. This isn't just theory. It's a system that's been in place for decades. Look back to post-World War II. Countries owed massive debts to rebuild economies. Printing more money was an easier way to pay back than raising taxes. The result? Moderate inflation. It eroded the real value of debt. The government's bills became smaller in real terms, while citizens paid more for the same things. Think about your rent, your groceries, your electricity bills. Every small increase may feel normal, but let's do the math. If your rent was $1,000 last year and prices rise 5% per year, that's $50 more this year. It doesn't sound like much, but over 10 years, it's over $600 extra per month. Multiply that by millions of citizens, and you start to see the invisible tax inflation really is. Meanwhile, who benefits? Governments, corporations with large loans, and investors holding assets that appreciate with inflation. Why doesn't everyone notice inflation? Humans are wired to focus on immediate concerns. We notice the price of bread, but forget the gradual erosion of our savings. It's a cognitive blind spot. Governments know this. Slow, steady inflation is the perfect way to manage debt without outrage. And the media rarely frames it as a silent tax. Instead, we hear words like economic growth or market correction. But beneath the surface, money is losing value, and most people are powerless to stop it. Let's talk about who actually gains from inflation. First, governments. They can pay off debts with cheaper dollars over time. Second, corporations with large loans. If you borrowed $1 million 5 years ago, inflation makes that $1 million easier to repay in today's dollars. Third, asset holders, stocks, real estate, commodities. Their holdings often rise with inflation. Meanwhile, you, the everyday person, see your rent, groceries, and utility bills increase. Your savings are often stagnant. Your purchasing power shrinks quietly. Here's the twist. Inflation doesn't just punish you financially, it punishes your planning, your retirement, your sense of security. History has countless examples of inflation used as a tool. Germany in the 1920s, hyperinflation wiped out savings overnight. People were paid daily because money lost value so fast. But even moderate inflation, like in the US in the 1970s, had a huge impact. Gas prices doubled, rent climbed, savings accounts barely kept up. And yet, governments saw it as manageable, a necessary trade-off for debt relief and economic flexibility. Now, let's bust some myths. Myth 1. Inflation helps everyone. False. It helps borrowers and asset owners, not cash savers. Myth 2, wages keep up with prices. Rarely. Most wages lag behind. Myth 3, inflation is unpredictable. Not entirely. Central banks adjust interest rates and governments control money printing. It's deliberate. Understanding this gives you an edge. You can see how the system works and plan accordingly. Inflation is a debt-erasing machine. Imagine the government owes $1 trillion. Instead of raising taxes or cutting spending, they let inflation slowly erode the real value of that debt. It's clever, quiet, and mostly painless for them. Pain is shifted to ordinary people. And the worst part? Many people don't realize until it's too late. Your savings, your purchasing power, your long-term plans, all quietly affected. So, what can you do? First, invest in assets that outpace inflation: stocks, real estate, inflation-protected bonds. Second, avoid holding large amounts of cash long-term. Even small amounts lose value over years. Third, understand the system psychologically. Don't panic during price hikes, but plan ahead. Fourth, diversify your income. Side businesses, investments, and alternative assets can buffer the impact. Inflation also affects behavior. When prices rise slowly, people spend more now rather than save. This boosts consumption, helping governments stabilize the economy. It's subtle manipulation. They want you to buy today, not tomorrow. Awareness is your superpower. Recognizing the invisible tax allows you to make conscious choices. What about the next decade? Technology may change production costs, but debt levels globally are enormous. Inflation will remain a preferred tool. The lesson is clear. Understanding the system matters more than ever. Those who see the invisible tax can protect themselves. Those who ignore it pay the price. So, let's recap. Inflation isn't random. It's a tool, a system, a silent tax. It benefits governments, debtors, and asset holders. It quietly erodes your savings, wages, and planning. But now you know. Plan wisely, invest smartly, protect your wealth. And if you found this explanation useful, subscribe to our channel for more videos that reveal the hidden truths of finance. Thanks for watching.